Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, May 9th, 2023. It's now the 8th. We start off in the S&P 500 daily chart and DeMark looking back to end of December 2021. I'll zoom into the current area now. I've zoomed into the current area with everything switched on except for megaphone. Please see video number 429 for an explanation of megaphone. The S&P 500 daily chart has printed the combo and sequential sell setup one count, and to negate that for end of day on the 9th, there must be a close below 4090.75 for the price flip back to the buy setup count 1. The only level in danger of becoming qualified is to the downside, again with this trend factor down 1 with a close below that for end of day on the 9th. And there's an ongoing demand line that could be qualified, and its level for the start of the day on the 9th is 4062.94. So a close below that level, 4062.94, would qualify the ongoing demand line. And there's familiar support at the lower Stark band and the channel 3 low. Price would have to make it below the conversion line and the baseline, which is running neck and neck at 4117.60. And I've seen the conversion line and baseline travel together at exactly the same price for quite a while sometimes. And some of the scans I'm seeing of individual equities have their conversion line and baseline right together and going sideways. And having them both together does make it easier to get under it. All it has to do is go below that one level and get below two support levels. The NASDAQ 100 NDXHILO chart is still where all the action is. The 5 EMA is 5 cents under the red 10 EMA, so you can see it in blue up here. 85.25 on the 5 EMA and 85.38 on the 10 EMA. So that was a nice little ride on the way down. When we got the sell signal, we sold short the Qs for not but 3 or 4 days and got rid of it, made a few dollars when we noticed that it was turning around and headed up, meaning the NDXHILO index itself and dotted. And now we'll go the other way. If the blue 5 EMA can make it above the red 10 EMA tomorrow on the 9th end of day and still stay within my parameters of plus or minus 5 from 0 for the ROC 12. And the long-term KST is still headed up and to the right very nicely. It's well above 0, almost approaching some of the prior nosebleed sections here. And the short-term KST wants to turn around and head up. It needs to get above its signal line and most importantly get above 0. And then we might have some short-term upside going on. And then if the intermediate term KST can pull back on the stick hard enough and get above its signal line here in red, that would be all three pointed up, and then we could be headed for some major upside. So I'll get on board with some longs on the Qs or something else in the technology sector, see what's doing the best. If it meets my parameters for the blue going above the red up here within plus or minus 5. And the NASDAQ Composite NAHILO is hooking around to the upside too. The blue is hooked around and headed up, along with the index itself and dotted here. That bounced from down here and headed up. The red 10 EMA looks like it wants to pull on the stick and head around, and the 21 EMA is still pretty much headed straight down. And the Rec 12 is at a decent enough distance away from zero to maybe coincide with the blue going above the red, but that's not going to happen in one day, so we'll have to keep an eye on that. And the only KST that looks decent, meaning wants to hook around and head up, is the short-term KST, and it's well below zero in the negative section. If it gets back up above its signal line and heads towards zero, that would be a good thing, but we need to wait for it to get above zero. Same thing with the long-term KST. Has no indication of pulling back on the stick and heading up, along with the intermediate term KST. No indication of pulling back on the stick either. And by looking at the New York high-low index, you can see that it's the big fat cap megatex carrying the day again, because the NASDAQ Composite has hooked around, as we just saw in the previous high-low index. The NASDAQ and the New York shows absolutely zero indication of pulling back the stick anywhere. Blue, red, gold. The ROC 12 is at negative 31. And the KSTs are all pointed down. The short term is below zero, intermediate term is above zero, and the long term is approaching zero to the downside. And the Shanghai Composite monthly chart shows a price line here, and it blasted up above its 24 period simple moving average, so the 24-month, and it did that today. I've been checking that, and it was hovering right below the 24-month in red here, and today it blasted above it. So if it can get above this purple horizontal line here, which is going to be pretty close to this long-term downtrend line going back to 2008 or so. So if it can get above that purple horizontal line, that negates this head and shoulders topping pattern in purple here, and that would probably put it above the downtrend line going back to 2008. That will be somewhat monumental. And the European diffusion indicator from Martin Pring, thank you Martin, shows the IEV, so that's the ETF for Europe. You can see I haven't showed this for a while. I did a video on it about the European head and shoulder chaos. You can see the topping pattern in blue, and it hit the measure rule pretty much, and then headed up and formed a inverse head and shoulders pattern using the same neckline, and it has broken out of that, and it bounced right off of the horizontal dashed blue line here. That's for negating the head and shoulders topping pattern in blue, and then headed down and then just blasted right up above it. So this head and shoulders topping pattern in blue is negated. And hopefully you can see the measure rule that I created for the inverse head and shoulder in red. So here it is at the bottom of the head up to the breakout point above the neckline, and copied over to here, and it's off the charts. So it could be the Euro and Asian parts of the world that go into the big time bull market, while the US flounders. And Martin Pring's diffusion indicator is definitely up there in the nosebleed area, but it can stay up there for a while. You can see how it goes horizontal when it reaches the absolute limit to the top, and you can get some pretty good upside movements from that. Sideways here, it just doesn't have any more room on the indicator to move up, so it's very interesting there. The S&P 500 support and resistance levels big board chart shows the gray areas at the 20 simple moving average S1 and the pivot point. And price in the aftermarket hours for the S&P 500 at 7:42 p.m. Central Time on the 8th is 41.34. So to the downside is the daily conversion line and daily baseline, along with S2 right around in the same area there. And to the immediate upside is R1 and R2. Get past that and start heading up, and then it's going up into the 4180 to 4190 area. You can see the daily Bollinger Band, mid-band, upper Stark Band, both of these ongoing supply lines, and this uptrend line all around 4190. The S&P 500 daily AD line along with the NASDAQ 100 daily AD line are still both above their 21 EMA signal line. And the ROC 1 has simmered down right at 0 at 0.5 and pointed down right in the middle of its green zone. ATR2 simmered down, went back under its volatility line into the green zone. It's at 43.34 and pointed down. And the McClellan breadth oscillator traditional version, to get back to 0, would require 741 advancers over decliners. Not much of a deterioration from the day before. So we're just idling under 0 a bit. Have a great day.